Hello, hello, hello. First off, I'm going to say congratulations to the New York Knicks. And it kind of inspired how I'm starting the show off today. And I'm able to, before we get into our topic of the day, I was thinking about Jalen Brunson's $113 million sacrifice when it comes to his earnings. He saw a bigger picture and decided to forgo taking that guaranteed money to allow the team to be able to build out and move forward with what they were accomplished, what they were able to accomplish for the first time since 1970. And it made me think about what he did, other stories that I'm also going to touch on. But I think that I'm going to make sure to try to remember and reflect on things like this when it comes time for me to have to negotiate and make decisions in my own life. Yes, it's not going to be 113 million. It's not going to be 1 million, but by thinking out of the box, by thinking about what the future may hold, what this achievement could lead to as far as, potential contracts in the future, his own endorsements going forward, and just just the achievement that he was able to contribute to, most likely because of this move that he decided to make. So another one that crossed my mind is from a few years ago, and let me see. Nope, not that one. Let's see. No. Oh well, I can't seem to find it. I thought I had a few things, of course, prepared, but now I cannot seem to find it. But anyways, it was some years ago. We'll just leave the heat map there. Are you guys able to hear me and see me okay? Just checking in. If somebody can just drop something in the chat just to confirm, I would appreciate it. So another situation that also I'm going to, like I said, make sure to remember something for me to reflect on is back in about 2008 when Michael Phelps was in the Olympics. He had written into his contract to get a $1 million bonus if he was able to get 8 gold medals in that one Olympics, and he achieved that. He wound up donating all of that money, but no matter what he went on to do with it, just having the presence of mind to add that into your contract, to make plans and bet on yourself and believe on yourself in that type of way. Now I'm going to give you one more scenario, and this one is in the other direction. It was a bad choice when this person could have negotiated much better for themselves. And I'm going to use this one as the example. It's Vincent Price giving his little monologue, using his distinct voice at the beginning of the Thriller. So they offered him a one-time $20,000 or a share of the future profits from the album, which went on to be one of the best-selling albums of all time, 70 million copies. And so a small royalty on the album itself, as opposed to choosing to take a 20,000 lump sum, was not the best choice. So you have to think, what is your worth? What am I associated here with? And think bigger sometimes. And just a few scenarios that I think we should think about these things when we have the opportunity to negotiate something for ourselves and potentially turn it into so much more. So, guys, thanks for tuning in. And now let's get on to one of the biggest news headlines of the week, which is SpaceX IPO. So here's a look at SpaceX. I was online, was live on Friday, and I think 1 o'clock I went live, and I was able to see at that time what the stock had done and what charts were showing. And it started right here at 11:47 a.m. for me to start to have visibility of what was going on there. Thank you for chatting, Neo. Oh, Nemo. Sorry about that. Okay. Okay. So, SpaceX. Now, I did not put in any orders of for shares of SpaceX. And oh, thank you, Jay Jordan, for gifting that membership. Appreciate that. So, this layout, this is the never mind. SpaceX. So I did not put in any orders for shares of SpaceX. I'm going to give it some time. It's going to be, I think, a very turbulent ride for the next several months. Some things, some of the initial investors and employees are going to be able to start to sell as of August. And then, over the next 6 months, things are going to be. Oh, wow. Nemo got the gifted membership. Great, great. It was already in the chat. I think that's what I'm seeing. Okay. So we don't know what the future is going to hold as far as this. I did not put in any orders, and some people, regular everyday investors, the retail investors as they call us, that I did communicate with or that I saw posting online, were putting in, modest orders. One person put in an order for one share, it didn't get filled, before the IPO. So then he had to go in and purchase his one share that he wanted as his starter position, something to watch. He had to go in and purchase it manually. Someone else, two other people that I saw posting about it. One put in an order for 7 shares, got filled for one. Another person put in an order for 3 shares, got filled for one. So there is definitely a lack of shares available when it comes to this. And like I said, a lot of people that have been early investors locked in are going to be able to sell their shares coming up and very soon. So we have to be ready for that. Now, nothing I say over here is financial advice, never a suggestion for what you should buy, hold, or sell. I'm just talking about what I'm seeing in the news. And of course, throughout my videos and what I share here, I'm sharing my financial journey. So I will let it be added to my existing funds, Daryl is saying about SpaceX. And that's the same way I'm feeling. So I did have some details I wanted to touch on about that. So VTI was definitely a fund that crossed my mind that I have 2 positions in. And so that is a total US stock market investment. So I knew in time it was going to be added there. Another fund that many of us might have, I don't have a holding in it, is a NASDAQ ETF like QQQM or QQQ. It's going to be added into these funds quickly. They've changed their rules. They're doing something different. And most likely the trend will continue when it comes to Anthropic and some other big names that are going to be having upcoming IPOs. But this one is the biggest in I don't know, recent times. I mean, this company has such a huge valuation, but it's said to be a 1.75 to potentially $2 trillion company. But as far as the weighting that it's going to get as it's initially added into these ETFs, it's not going to correspond to what the company claims to be its valuation. It's going to take some time for it to be treated in that way. But another thing when it comes to kind of the lack of shares is that Elon, let's see, when it comes to SpaceX, Musk owns approximately 98% of the company's B shares and 11% of its A shares. And so it's anticipated that he's going to hold on to his shares, especially the ones that have the voting rights. And so it's going to take time for even our ETFs in order to incorporate larger percentages of this into the fund. So I asked, just trying to do my own research and trying to use some different AIs to see how much they anticipate this to have a percentage of initially into the funds that I've already mentioned. And it said, for example, VTI may have a small weighting of about 0.20%, and QQQ maybe about 0.6%. So VTI is about, I would say, 3,600 different companies. It's all of the US, while QQQ and QQQM have a little over 100. So we have to see in time. That'll be probably like the initial weighting, but as more shares become available, as they do their first time of going and doing their earnings, and we get to see a little bit more about what the true value of the company is, then we'll see heavier weightings potentially be incorporated into our ETFs. But I was looking at some news, and let's see, I think it was on X. So like I said, the people that I was seeing posting about it are regular retail investors. Wow, Jake Paul was able to pick up 70,000 shares at the IPO price of $135. I was seeing people posting in the Discord and online over on Friday that they had small orders in, modest orders, 3 shares, 7 shares, even 1 share. And they either did not get filled from their IPO order, or they just got filled for one. And they had a few shares that they wanted to get in on. But Jake Paul, he has an in, he's more of a prestigious person. He is a boxer. He is an influencer. He must have that reach in order to lock in such a substantial amount at that IPO price. So he was able to potentially make millions. I'm not sure how long he's going to be locked into holding on to those shares. But I'm not disappointed that I didn't even get 1 share yet. A lot of times, well, historically, when companies have an IPO, it can go different ways. There have been many companies that, let me take a look. Many companies often drop by 20 to 40% in the first 3 to 6 months. So it's usually a good rule of thumb to give it 6 months, to wait 2 to 3 weeks at least, to just watch it, see if the price stabilizes. And like I said, those early investors, those employees, there's going to be different waves of people that have been in long before us that are going to have that opportunity to sell their shares throughout the next year, 6 months, year, some starting in August of this year. So we have to be ready for that. And I don't think it's going to be until September of 2026 that we're going to see the first earnings around what this company actually is worth, what you know how things are going. It's one thing to say, I have a valuation, I give myself this valuation, but we need real numbers to really know what's behind what's going on with what's going to move forward with SpaceX as a company. But they were able to raise a historical amount of money in this IPO, which was on Friday. I'm seeing some numbers of 75 billion on raised, and that's bigger than many years of other companies' IPO with combined. So the next big ones that we might see are OpenAI and Anthropic. But I touched on what potentially is going to happen early on when it comes to some of our funds, VTI, QQQM, and then in time we may see this company move into the top 10 position with heavier weighting, but it'll be some time because it's just going to be getting a small fraction of a percentage if what we're seeing in the news right now is correct. But this move has turned, let's see, Elon into a trillionaire. And so I'm glad for the exposure that I'm going to have early on. And then down the road, I'm definitely open to having a direct position, but I'm going to give it time to shake out and get in when the time is right for me and it's the right fit for my portfolio. So it has, did anyone in the chat already invest on Friday or have a plan on moving forward with building up their position even before some of the dates that I mentioned of seeing how the shares are doing when we get to August, when we get to that first earnings report and things like that? So looking back at some other IPOs from years past, like I said, it can go different ways, but like, for example, Facebook, it came out and a month later, it had dropped by about 18%. By the time we were 1 year in, it had dropped by about 31%. But then on the other end of the spectrum, we have a company like Coreweave, which after the IPO, within a month's time, it was up 5%. And then a year later, it was up 87%. So all these companies are different, whether it's uh, Snapchat, Airbnb, Uber, they're all different companies. So we don't know what to expect. We definitely don't know what to expect when it comes to SpaceX. But as a rule of thumb, and just thinking about where IPOs, the direction that they usually go in, you have to use your judgment on if you want to be an early investor and take on the potential of the volatility and the movement as people are able to sell their shares and make adjustments in the early stages. But it's really interesting to see how these funds are able to make these sudden changes in their methodology and take on having this company listed and ranked and kind of fast tracked in a different way than other companies, kind of giving them an edge that is kind of uncalled for, or, you wonder, uh, you see that money talks and influence matters. All right. So guys, let me know if you have any questions, comments on what we're chatting about today. Hello, Michael. Thank you for tuning in. Okay. Jay Lee, you're not in a rush with this one. Yeah. And like I feel like even if I was in a rush, uh I could have been held back if I doubt that the amount of shares at that initial IPO price, just seeing other people's shares on what happened. And I didn't see anyone say that they got it at a low price, $130, $135. By the time they were even filled, it was at a higher price. Hello, David. Thank you for tuning in. So, guys, let me know if you have any questions or comments, but definitely something that I wanted to touch on. Like I said, I was actually live on Friday, but I was just having more of a regular money mindset conversation, so I didn't want to get too much into SpaceX at the time. Now, I put up a poll question the other day on my community wall. I don't know if any of you that are tuned in now have voted in it. Let's see if it comes up. So it was asking, again, congratulations to the Knicks. So my poll question here was asking, do you want to just stick with the basic S&P 500, a VOO or SPYM, or do you want to go into something bolder like SPMO, which is a momentum ETF, or a more cautious growth stock like SPYG or SCHD, or a more high achieving growth stock like VUG or MGK? And I was surprised. No one put in the comments here that they want to do a mix, but I was surprised that just the basic S&P 500 came in as the winner of this poll with 46%. SPMO, or the momentum ETF line, came in at 30%, so second place. But that shows me that what my community really is all about, and it seems like just having low cost, foundational, diverse investments in our portfolio. And I wanted to touch on this and tie it into VO just recently hit $1 trillion. So it is the largest ETF in existence. So all of those assets are in just those 500 largest companies in the US, heavily weighted into the mega cap companies, the Mag 7 companies, like, of course, NVIDIA, Apple, Microsoft, Tesla, things like that. Google, of course, which is an investment that has not disappointed when it comes to my portfolio. So, guys, let me know of you guys in the chat right now. Would you have voted, or did you vote for VOO as your go-to S&P 500 investment, or are you focused on doing something a bit more aggressive, or a mix? Now, I definitely would say that I'm doing a mix. I've already built out my foundation, which is FXAIX over in my accounts at Fidelity. So now I'm bringing in SPMO, SMH, different funds that are going to rebalance for me. Nothing that I have to worry about long term or be, micromanage, but giving higher growth than the basic S&P 500. Okay, so I see Kevin is giving a comment here saying that he's wondering where all of the 44,000 new millionaires will be investing their newfound fortunes. If they want to invest it, who knows? But they might be able to just retire and live happily ever after. Hey Rod, thanks for tuning in. Let me know if you have any questions or comments on SpaceX. Uh, Thank you for sharing me out, Kevin. SpaceX is a pump and dump scam. Well, that's why it seems like, Michael, you're one that needs to see some proof, need to see a couple of earnings reports, need to see how this stock moves over time and not be one to jump in on day one like many people were waiting to do. And there's nothing wrong with that. Personal finance, we all have to make the moves and make the choices that are the best fit for our portfolio. And Jay Lee, I'm not sure how to pronounce your name. You might have told me last week. Sorry, I forgot. A small entry is never bad. Yeah, if you want to get one share and use it as your as a tracking position, a failure on anything, then if you're comfortable doing that. I very rarely do that because I just like my decision. And once I add something to my portfolio, I'm probably going to take some time and be building. Maybe put on an automatic investment, a daily, set amount, or make the commitment to go in there and manually build it up. So, and then in time, I might shift that daily or weekly attention to something else. But that's how I've really been able to go about building up my portfolio little by little. And I wrote a post to, I think, definitely in the Discord, maybe to my channel members the other day. And it was talking about, and even on my Instagram page, I posted something. Let me see if I can find it. And don't think that you're behind. We're all run your own race. Social media, this is the post I had put up the other day. And it says that social media will have you think that will have you believe that everyone is rich, that everyone is investing, that everyone has it all figured out. And we need to just dial it back and realize that many people are still learning, that we're all still trying to do better, take those steps one by one. And most people are, I believe, still like us in that building phase of making sure to get our portfolios on track, do the research in order to have ourselves in line for the retirement and the financial stability that we're striving to have when it comes to our portfolio. So progress, it means everything. And when I talk about investing small amounts of money, I take it serious. People talk about some of the apps saying that they're gamified. Listen, no gamified feeling when I'm putting my real hard-earned money in there and working to invest and to build up my positions. So that's how I go about it. And I definitely have been glad to incorporate fractional shares into my way of having my portfolio on track for the future. So I say all that to say that be proud of what you have, even $5, $10, invest it. Put it into your savings account. If you don't have one paycheck or 1,000 or 3 months, whatever goal you're working on, if you have some money aside, whether it's a trading account, investing account, savings, whatever it is, deposit it. This is how I go. This is my thought. I encourage you to deposit whatever, invest whatever you can keep invested. Don't let the dollar amount hold you back and feel like, oh, what is $5 going to do? What is 10? What is 20? What are these amounts going to do? If you stick with it, it can turn into something substantial. So when people ask me, how much money do you need to get started with your investment account? How much money should I have for this or that? I don't want to say a number because I don't want to say the wrong number for their budget and their circumstances right now. I just want you to get started. So whatever you have, if you're, I was saying this on Friday, if you're newer to this and you're a little skeptical, then you might want or need to just dip your toe in the water and do something small and see how it moves and how it grows. But we have to think about the big picture. We're always seeing in the news how that Social Security is going to get cut. We if anything of what has gone on over, I don't even know what time frame, but over these years, just seeing these different administrations coming into office, we don't know what we could be in for as things change, as far as our benefits and different aid, and nothing is set in stone. So we have to live our lives ready to take care of ourselves and not be dependent on certain things that are in place today. Even if it is something that is changed under one administration and down the road something is reinstated or something changes, we still have to be ready for that time period, the time when it is not available to us. We've talked about this in the past about the changes when with I can't think of the name of it. Food stamps, they don't call it food stamps anymore. They call it whatever. Just aid related to our health insurance, getting groceries, all of these different things. So I'm going to take a look back at the chat and see. Invest you must. Sounds good to me. All right, I'm taking a look back at the chat. I did, and I appreciate your input. I want to slowly shift from high tech, though. I have too much of that. You have too much tech in your portfolio. What were you asking me about? I think you were asking me about SCHD and SPMO. Was that your question the other day? I'm not sure. Okay, so I'm going back up. I have two. One is based on SPMO. Let me go up further to see if there's a start to this question. All right, I have two ports. I'm not sure if that's a typo there. One is based on SPMO and VOO, and the other is VUG. Oh, two portfolios. Okay. One is SPMO and VOO, and the other is VUG, VXUX, and JEPI for dividends. Okay. That sounds like a good mix. So you have growth, you have international, you have the basic S&P, and then you have the momentum for, a more aggressive mover in your portfolio. Now the JEPI, JEPQ, I'm not that familiar with those off the top of my head. I've never done a video on them or anything, so I'd need to take a look, but definitely names are funds that I hear about quite often. So yes. We need to learn the role. We need to learn to roll with the punches. Invest is more about behavior. Yes. And so I put out a short today, and it was from my SNAP benefits. Yes, that's exactly what I was trying to remember. That's what they call it nowadays. What was I about to say? So, as I said, I was a little surprised that most people were leaning towards that S&P 500 investment, but everyone is in different stages of their journey. I probably would be there a few years ago before I got my FXAIX, which tracks the S&P 500. That's the one I have in my retirement account. But I also have my shares of VOO. I have my VTI. I did my over 3 year, about a 3.25 year stretch of my $10 daily into VTI. So I put the work in those areas. So I think that's why for those of you that maybe don't have that foundation yet, you're leaning more there, while I'm in a different stage of my journey and ready to move on to something for more aggressive growth, but within a reasonable way that I feel comfortable with in my portfolio. So those are where I'm going to continue to focus on building up. So thank you, Anthony, for tuning in. Just taking a look to see if I missed any comments. All right. And guys, there's different things. I know I'm only on vertical today, but always remember to, like, if you're not already, subscribe if you enjoy this type of content. And when you see my videos, shorts, live streams, make sure to leave comments, like, hype. Those are ways that you can support the channel. You can also do that by becoming a channel member. Again, thank you to the J. Jordan for gifting a membership today. And trying to think if I missed anything in my station break there. So Anthony, last week I wore my orange dress and I had my blue lights on, and this week I've decided to put on blue and use my orange lights. Yes. And if you're not realizing what I'm doing, I'm trying to wear the Knicks colors. And when I was live on Wednesday night, I was Discord live. I actually wore this for my live stream. But I say all that to say, again, congratulations to the Knicks. And yes, so this was the right color. So it was the choice of the day. I didn't have an orange necklace to put on or any orange accessories. But that's not stock talk. But, you know, a little bit of that always gets mixed in. So, guys, let me know your thoughts on SpaceX, your thoughts on ETF investing, anything that you want to hear more about in the future as far as my videos, live streams. How is your portfolio going this week? I have the heat map up. It's Sunday. Are you guys like really in tune with your portfolios? Do you kind of feel a little sad on the weekends, like you can't wait for Monday, like the stock market is something to look forward to as far as the start of the week and starting to see what is going on and how things are moving? I see jokes like that, you know, it's like it's something to look forward to on a Monday. Thank you, Farrah Brooks, for tuning in. Okay, so I got through a lot of my topic for today. So guys, make sure to drop any comments or, you know, fun combinations, things that you have on your mind. Okay, so David is sharing a comment here. I admit I grabbed a couple of shares of SpaceX to try it out. Okay, okay. I did not. I did not. I was talking about SpaceX at the earlier in the show. So, David, did you buy them over at Fidelity? Where did you buy them at? Are you willing to share more? What price did you get in at? Were you close to the 135? And are you expecting that this to be, well, let's see. How did it end out the day? So up 19.22%. Where's the high? So it debuted at 135. Debuted. Is that a word you can use for the IPO? All right, so it got as high as 176.52 and it closed at 160.95. And I guess we don't see, I get maybe when do we see the after hours? We'll see as of 8 o'clock tonight. I think we'll start to see more detail across most of our platforms as to what we're on track for tomorrow. Okay, I actually bought on Robinhood and waited throughout the day before purchasing it before I purchased. So I think I got in at about 164. Okay, okay. Yes. Just want to see how it does. A lot of people did. Yeah. But I don't know if you were here earlier when I was saying that I seen several people not be able to get their modest orders filled, 3 shares, 7 shares, things like that. Even one that one share that was put in, at the IPO, to automatically purchase that one share, it didn't fill. So, but I didn't even go in an attempt. But even, I didn't touch on this earlier, but even Fidelity changed their rules. I think it was like usually $100,000 limit on being able to buy into something like this, and they put it down to $2,000, which is a very low bar for, a Fidelity, a Charles Schwab. Most people's balances are very substantial over there. They hold a lot of retirement accounts, 401ks and things like that. Whereas the average balance on a Robinhood or, Webull or something like that are usually substantially lower. So, hello 755. Thanks for tuning in. Just want to see how, okay. Um, that's a crazy gap for Fidelity. Yeah. That's, yeah. So to drop their usual limit by over $90,000. Yeah. But some other brokerages stuck to their normal uh, high level, high account level rules that they have in order to buy into the IPO. So if I was going to buy a share or anything, most likely, I'm not even sure. I really didn't think about it where I planned on buying it. I don't use my Robinhood account, but Robinhood had no limitations at all on what if you what your other account balances have to be. So definitely a place where anyone could have gotten in, and probably a significant amount of people did. So also, when it comes to Robinhood, I don't hold any shares of Hood in my portfolio, but something that I've kind of been thinking about, because of the Trump accounts and things like that, as those roll out, people have said, and it seems logical to me, the thought process of when the children's accounts are rolled out and you have to activate it or set it up and get started with it on Robinhood, most likely, you know how people are nowadays, they will not take it upon themselves to move the funds to another broker. So a lot of accounts could be building and growing over the next couple of decades at Robinhood because of that initial kickoff of setting up those accounts. So I have nothing. I have the Robinhood app on my phone. I just use it. I just jump on there every once in a while for research, but I've never added a dollar to my Robinhood account. When I opened the Robinhood account, I knew that I was just opening it for research. I already had enough portfolios going on. And when I got into investing outside of my 401k, my initial accounts that I opened up were my first two. I'm not sure exactly which one came first, but my first two were M1 Finance and Webull. Those were my first two accounts. Over time, I wound up, I liked Webull much better. It was my first time, but I was a hands-on investor and I wanted to buy the Apple and the Google and all the different things. And I also have VTI and VOO over there, but I have I have all the Mag 7 except for Microsoft in that portfolio. So that's my growth portfolio with a little bit of funds for stability. And then I have some other blue chip stocks or a few select other companies. That's where I have my Disney and my Tesla, my Netflix. So a few other companies are over there also. But I wound up closing my M1 account because all I had ever done over at M1 Finance was make my pie. And the thought process of the person that helped me to get it set up was I just add my money in and it's going to get split into, all the different things I created that initial pie with, the percentage to go to Apple, to Bank of America, to Google, to whatever we chose at that time. But yeah, I didn't like it. I didn't feel like it was investing, which it 100% is. But then down the road, M1 started to have some fees associated with having your account if you didn't have, I think, a $10,000 balance. So I wound up liquidating that account and just moving that money over to my account at MooMoo, I believe that's where I moved my cash to. And then I have another portfolio that I built over there. That's where my Microsoft is over in that account and my realty income and things like that. But I have multiple accounts, different brokers, and might not be the fit for everyone, but it works for me. So SpaceX, I'm waiting for the lockout to be lifted before I buy. Yeah, the one just gave that comment. And yeah, so you have to do your research. You have to know your tolerance. So Daryl, it seems like your can't think of the word. Your volunteer schedule seems like it's changed because you're here more on Sundays, a little later than I think you used to be able to tune in. Um, all right, just taking a look. I mean, I see volatility on the horizon for Tesla and Netflix. Seems like I've been holding, maintaining a support. Okay. Tesla is a very volatile investment. If you look at Tesla over the years, it's just Tesla. When I look at my average on Tesla, it definitely shows me that that's one that I definitely worked to put in the work when it was like I bought the dip. I definitely put the work in at the right times because um, all right, so this is back 2021, $407.36. And today, or the close of last week, $406.43. It's the same price. It's the same price from 2021 to now. But it's I have 17 shares, about 17 or 18 shares in my portfolio. When people ask me about Tesla, I say, it's a car company that doesn't fit into the box of a car company with the robotics and it being their advancements into autonomous vehicles and self-driving technology and all these different things. It's just something different. But I definitely wanted to have the exposure. So little by little over the years, I definitely DCA'd into it. And so let me take a look what my average is on Tesla. My average price on Tesla is $207.41. So I most definitely was putting in the work when it was at some lower points back in the day. Let's see. Yeah, in 2024, I was buying $144, $139, $151. So $162. And very rarely do I can see a full share or a half a share purchase. I just go little by little with building up my portfolio with whatever I have. It's not until you look at it after some time that you can see, oh, those $7, $5, $10 investments. And I'm not talking about positions of 100 shares or anything that might not be impressive to some, but in my own journey here. I'm running my own race. I'm not trying to compare myself to the next person. I share my portfolio, I share the percentages just to see, just to show, what you can achieve, and just to hopefully make people feel like, know that someone in your household has to take on this responsibility of handling the finances, of handling the investments. This is definitely a way that we can build wealth, generational wealth, give our children a head start in life, so many different things. So don't overlook the opportunity. And then Netflix. This is another one. So this is a newer position to my portfolio. And I, all I've been able to say about Netflix is I pretty much invested into it. I decided to cut some of my shares. I'll tell you, some of the fastest investing I do is probably when I cut something from my portfolio and then I go to reallocate that money out to something else. Because usually I'm, you know, even if it's daily, small amounts daily, unless I see a significant dip or something is going on in the news or something like that, um, that I would go heavily and, pick up several shares or something like that. But anyways, I sold some of my Disney stock last year, very shortly before they announced the stock split. And then a couple of weeks after, shortly after the stock split was announced, then they were in the negotiations to go ahead moving forward with trying to buy Warner Brothers. So it's been months now that I've been holding on to my little position. I probably have about 12, because that initial my initial investment when I bought the sold a little bit of my Disney shares, I actually only bought one share of Netflix, which was about $1,000 before the split. So right now I have exactly 12 shares of Netflix in my portfolio. And yeah, I've been waiting. I've been waiting for it to turn around. But those two things together, as well as competition, but there's still a leader when it comes to this. I was just looking at something here and it says YouTube has officially surpassed Netflix in viewership. But let me see, I had something else. So the three biggest platforms when it comes to streaming or are Netflix, of course, Google with YouTube, which you're watching me on right now, and then Disney. But, Disney shares have been pretty stagnant for years now. So I decided to give Netflix a try. I had actually been looking at my Disney for some time, wishing I had invested into Netflix, and then Netflix just, I feel like, did too much too soon and still needs time to recover. So something I might get more into detail in one of my upcoming videos. But yeah, I'm still holding it, and I'm definitely okay with sharing with you guys. Everything is not perfect when it comes to my portfolio, but when I tell you that the good outweighs the bad so substantially, I really mean that, because I don't want you to be turned off to investing. I've made my mistakes in the past, and that's why I keep to my funds. I keep to true blue chip stocks, things that you don't have to constantly micromanage, things that you don't have to potentially get kicked out if you have a stop loss on over and over, because they just are not things that are weathering the storm well. Now, this year, we started off with a rough start. Almost everything in my portfolio was down. All the Mag 7 was down double digits. And I'm okay with that, because these are quality companies. These are companies, the fundamentals are there. I have to just understand the circumstances and just keep on building and moving forward. And I've been at this for a few years now, so I have different situations to reflect on, just like what I just shared with my average when it comes to Tesla and where it's at over these last several years. It's back to the same share price, but it's something that I'm holding for the future. I'm not in any rush to cut out of my shares of Tesla, but I definitely seen drastic swings. Sometimes I'm up, around 75%. Sometimes I'm up 130% when it comes to my Tesla, but I'm just holding on. Okay. I did the same with Disney and left my cash instead. You left it in cash, so you're waiting to choose something to reinvest into. I definitely could have had a lower average when it comes to my Netflix if I had gone slowly into investing. Because if I had taken a little bit of time to invest into it, I probably would have been had some money deployed before and some after the share split was announced. But it was only $1,000. It wasn't that I was planning on making any huge position there. But it is what it is. Sometimes when I reflect on the individual companies that I've incorporated into my portfolio, I think to myself, yeah, I could have just bought some more SPMO or some more uh, of a more diverse fund. But I made the choice, and that's it. I have to move forward and not beat myself up about it. Like I said, everything is not perfect, but the good outweighs the bad, and I don't want anyone to be intimidated. And definitely feel free to ask me about any particular investment or an update on something that I've shared in the past. It's very rare that I cut something completely out of my portfolio, but when I do, I usually do share it in a video. But it's been a while since I've gotten rid of something completely. I would say the last couple of things I can remember were like Ford and JetBlue, and those were some time ago. That's the reason I look more into Netflix, but still waiting for better signal. Okay. Lisa, have you read the article Bank of America told investors to take profits on June 5th? I am staying in the market, but I have taken some profits. To take, no, I did not see that. I didn't see anything tied to that date that I recall. And I'm not taking profits on anything when it comes to my portfolio. So um, I'm still in the building phase. Like I said, usually when I do cut something or I I'm reallocating it into something else, or if I decide for some reason, like I take a look at a retirement account and I think something is underperforming, I'm just moving it out of that and into something else. But I'm not tapping into my accounts right now for income. And if I do have a cash balance, I do also trade. So it never hurts to have a little bit of flexibility when it comes to my trading account balance, because I like to buy quality contracts when it comes to my options trading, and I like to have the option of buying, even if it's not a true leap, which would be over a year. Even if, like right now in this time frame, if I'm able to buy mid-January contracts, they're going to be a bit more expensive, but it'll give me that time and that flexibility if something does come up in the news and my contract is not taking off as quickly as I anticipated. I can hold on to it and then, make sure to sell and secure that profit. So, has anything caught your eye? I mean, space is everywhere. Anything like quantum. Yes, I have. I thought about it. I don't have any shares of like QTUM ETF in my portfolio as of right now. But yes, definitely another area, just like with DRAM. There are some other, memory. There's different parts of technology that I have caught my eye and are interested to me. And I definitely think I could diversify into with my portfolio because I want that additional growth, but in the way that is a right fit for me, nothing too aggressive. Um, Veteran is asking, do I use margin? No, I don't use margin. I I I only work within my cash balance that I have as far as any trading that I do. Now, I do have a margin account. I had to get a margin account just to have the level of flexibility that I wanted, the level of options trading. I'm kind of a person that even if I'm not necessarily going to use the functionality, I want it accessible to me. And so I wanted the highest level of options trading. And I wanted like to do straddle options and just different functionality available to me. So I have to have the margin account, but I don't use it for trading. Okay, I'm just taking a look back at the chat. So guys, let me know if you have any questions, comments. Uh, if you enjoy Sunday Stock Talk and have anything that you want to see in the future. And again, let's take a station break. I see that at the bottom of the chat right now at 4:01 p.m. So if you don't have a taxable account that you are able to do the research and dig into the fundamentals of your company, consider using my referral link and opening an account at MooMoo. And that's an account that I've been using for several years now. That is where I have started out my dividend portfolio. So I have my Realty Income, my SCHD, my Main Street Capital, as well as a couple of blue chip stocks over there, like my AMD and my Microsoft. And great research tools. You'll get 8.1 APY on your uninvested cash for the first 3 months and other perks. So check out my referral link. It's in the description and also, I think, pinned in the comments today. Getting in late. Did we think, what do we think about the SpaceX IPO? Yes. I talked about SpaceX quite a bit at the beginning of the show, so you're gonna have to catch the replay. Come back tomorrow. There'll be chapters on the video and all of that, okay? But just to touch on it, I did not buy any shares, and I think we have to be ready for the volatility, but you're going to have to catch the replay on that one. But thanks for tuning in. So I like quantum, but have not bought into it. Yes. So I think I'm saying the ticker correctly. Let's see. QTUM. So yes, QTUM is the Defiance Quantum ETF. It's the first thing that just popped into my head when I saw that in the chat. So you can do your research if you want to go the ETF route, or if you don't want to have to pay the additional fees as associated to the ETF, then you can definitely go pull up the ETF, look at the top 5, the top 10 companies there. And then if you want to go that direction of having the individual stock as opposed to the ETF, go through and look at the fundamentals and decide which one might be the right fit for you. Okay, okay. All right, let's see what Daryl is saying here. I normally buy at market price, but should someone put in a limit order for SpaceX? You can do that. I mean, I as long as the only thing I've had limit orders sitting at times for months and before they got filled. It's just a matter of if you have the budget for the order to sit. I've been pleasantly surprised by putting in a limit order and even, 6 weeks down the road, actually catching that price. Another thing you can do is potentially set alerts so that you're just taking a look, and you'll be able to jump in manually. And if your budget does not allow for multiple full shares, which is what I usually have to put in when it comes to limit orders, a way of going about building out your position. But it just the IPO was just on Friday. Like we don't even have much of anything to reflect on. So as far as what limit price you're gonna, I would say give yourself a little time, or decide what that limit price is going to be as far as getting that order placed. Because like I said, statistically, things can be alerts on Fidelity. I think they do, but I don't use my alerts on Fidelity. I have, multiple accounts at Fidelity, but I happen to set all of my alerts on through my Webull account. That's just my habit and my way about going with it. So yeah, all day long. That's what drains my phone and my watch during the week, are drained by alerts. Some of which I do take the time to stop what I'm doing and go and turn off or make less sensitive. But some of them I just turn them off altogether because they might be tied to something that's just not even needed anymore. But I have different ways of setting up my alerts. I would need to take a look on Fidelity. I'm quite sure they have it. I don't know that it sends like it'll pop up on your phone and the way that I get them through Webull. So no matter where I hold the investment, I just happen to set all of my alerts on Webull, and that's what works for me. So I'll get so what I'm saying is my alert will pop up from Webull, but it might be something that I'm buying over at Fidelity or on my MooMoo investing app. So Daryl, no sorry for the questions. Thank you for tuning in. Thank you for being a mod. You don't send me. I'm gonna send you an email tonight. Maybe be a future show topic. How to set up alerts. How to set up alerts. Okay, we can. How to set up alerts on Fidelity, because that's something I would need to I would need to test out myself. Like I said, just the way that things have evolved for me, Fidelity is not my alert place. But yeah, some of my alerts are related to a one-time options trade that I did months ago that I don't intend on trading this particular company again. So on any app that you use. Okay. All right. Okay. Alerts. Like this is a while back, there was something going on with McDonald's. I think there was some salmonella related to their lettuce or something, and their earnings were coming up, and so the stock was not doing well because of what was going on with the recall and stuff like that, and trying to get that figured out. I don't know if anyone remember this. This is probably it was a while ago. I would say maybe over a year ago. So anyways, because of that, I think I decided to trade McDonald's stock. I don't hold any McDonald's shares in my portfolio. I very rarely trade companies like that. But that particular time frame, I thought because of what was going on in the news, I was going to trade it. So just different things like that. So now definitely a company that I have my alerts turned off for. But when it comes to trading, Buy or sell what, Justin? When it comes to trading, I have also evolved when it comes to that. I'm going to stick to trading just my SPY, QQQ. If it is an individual company, I want it to be a larger company. I want it to be a Tesla, Microsoft, something very high market cap, because I've in the past traded like Uber or Lyft, and they don't have the liquidity. I wasn't able to put my stop loss as tight as I am with other larger ETFs. So, and I wind up having to take a break, take a few minutes, call up Weevil and find out why is it that I'm trying to put my stop here. And it taught me something new about what was going on with my portfolio. But a while back, I think I've mentioned this a couple of times during my live, someone, people make comments of like those stop losses work for you YouTubers, and as though what I'm talking about is fictional. And everything that I talk about is what I'm actually going through. If you don't take the time to figure it out, then that's on you, because you're not putting the work, you're not being a responsible investor and trader, in my opinion. So you have to take the time to have an understanding and do what's a right fit for you. If you work during the day, if you don't want to take on the potential of having to move your stop loss and be in a trade, and I want us to be on the winning side of everything that we're doing here. So you have to do what's right. But for someone to say that using a stop loss doesn't work, it does not work overnight on a short trade. So if I'm going to hold something overnight, I have to make my decision. I have to make my decision at 3:30 before the market closes. If it's something that potentially could take a turn, I have to make my decision, and I might cut out of something early because I don't want to hold it overnight. But I don't know if you guys are too much into options trading and understand what I'm talking about, but there are different ways to go about mitigating your risk when it comes to trading, and as well as investing. And when it comes to investing, I really don't have that obstacle anymore, because I really truly invest into quality, not investing. I've shared several companies that were, that are no longer in my portfolio, that I struggled, that I've been through the pain with. I think one I recently talked about was, I think it's JAGX. Yeah, Jaguar Health. Let's look at the 5-year on Jaguar Health. Do you see this? I don't know if you guys can see, but it's down 100% over the last 5 years. Ridiculous. Ridiculous. Let's put in something that we all know. Let's put in Apple stock. Apple stock up 123%. Jaguar Health down 100%. So this is what I mean. I had Jaguar Health in my portfolio. Jaguar Health went from, I think, $1 to $4. That's trade. I needed to know how to navigate that. I needed to know this is not an investment. This is not a company that has been that's on track for future growth, that has all of the pluses that are on the side of Apple, a Microsoft, a Google, those type of things. Yes, that doesn't look good. Okay, the person I watched only trade stocks that beat the S&P 500 at least 30% for the year. Okay, okay. Maurice Walker, thank you for tuning in and chatting. All right. I am so old. I was thinking about the Jaguar car. Oh, okay. My stepfather had a Jaguar. It was burgundy. He loved it. With the actual Jaguars on the hood. I think someone was asking McDonald's. I think I saw a comment. Yeah, McDonald, the McD trade. Yeah, I'm not trading. There are certain companies I'm not, yeah, they're just not the fit for my portfolio when it comes to trading or investing. And um, every once in a while, there's just something going on very specific, some specific news that I think is going to make a certain company pop. And so I might buy a put, I buy a call, or like the scenario that I was sharing with McDonald's and the salmonella and the bad, press that they were getting. That was a put situation where I was expecting that between that and earnings, yeah, it was just going to be just a rough time period for them. Yeah, I could not remember that name of that company for a while there. But ChargePoint, there's been others that I've shared. Yeah. And it's funny, when I look at my portfolio, it shows me the conviction. It shows me that my lack of conviction dropped off early when it comes to certain investments because my Apple and Google and other positions, they grew to 20, 25 shares at least, while some of those other ones, they did not become substantial, and thankfully, because they were failing investments. Definitely not, things that I should have been just, if anything, if there it was a time period when it was going up, just constantly trailing in order to make sure that I'm cutting out with the max profit that I could potentially gain. I lost money on EV charging company. Yes, the EV charging company uh, that I lost on was ChargePoint. That's ticker symbol CHPT. Let's look at that one on the 5 year. Yeah, it looks almost like the Jaguar Health. It's down 98.92%. But yeah, like I said, so much. Those were smaller positions. Thankfully, they did. I wasn't, $5,000, $10,000 into these companies that took these turns. But at the same time, if I was better about using the technology that was there of having my stop loss on, I could have been out when it dropped. Depending on what I decided my risk tolerance was, 10, 15, 20%, I could have just been cut out of there, cut my losses, and then focus on something else. Now, that's not something I like to do constantly. I'm not a trader. I'm much more of an investor than a trader. But, we have to, but I do it all. I do it all. I put the kiss of death on my companies. As soon as I invest, they lose money. Don't say that, Daryl. But if you truly feel like that, then you stick with your SMH and your different funds, some VGT or something like that, so that we're not betting on one individual company. And yeah, definitely a message I like to get across here for people that are newer that might just, come across my channel. You don't need to buy individual companies. You can work your way up to that, and it never has to be a part of your portfolio. And I think that's what people think when they think about investing. You have to buy the shares of all of the different things. And it's a lot of work. It's a lot of work and a responsibility because you have to research these companies. You have to keep up with their fundamentals. And that's why I try to keep my individual companies to things that, if for some reason I was not able to look at my portfolio for 5 years, everything, if for some reason from 2000, if my portfolio from 2000 to today, I wasn't able to access it, I would come back and I think I would be thrilled at the way that my portfolio looked because I know what I put in the work over these last few years to build into and what they've done. And so I would be okay. Apple, Microsoft, Amazon, a lot of the companies, Google, of course, my funds like a VTI, I would be just fine. And so it's not everything that you can rely on for 5 years, 10 years, but the things that I currently have in my portfolio are companies on track for future growth. So I feel okay. I haven't mentioned Meta today, but that's one. Meta and Microsoft are actually two that I'm still working on. And then I'm considering maybe another fund to incorporate because I don't want to be more heavily weighted into all individual stocks than I already am. But I guess I said I have the Mag 7, so you would expect in those, the highest blue chip stocks. So even though I didn't mention it earlier, you could, I'm sure you guys would know that I do have Meta in my portfolio. Micron is one. As far as my semiconductor stocks, I worked on my Nvidia, then Taiwan Semi, and then AMD. But after that, I shifted to SMH, and I'm seeing that Micron is a leader in a couple of my funds, if not it's in the top three, I would say. So I may pick up some shares of Micron, but I don't feel definitely the need to because, like I said, I'm getting my exposure there, and if things shift, they shift, and I'll be covered because those funds keep you on track to have exposure to those top performing companies. It's just a matter of finding the one that's the right fit for you. The expenses aren't too high, and just move from there. So WQTM, that's your go-to fund. Yeah, I think I have heard of that. Wisdom Tree. Okay, so this fund looks like it's came out last year. WQTM. 100%. Lisa, you don't need to buy individual stocks. Yes. Over 1 year, lowered my single stock position to 5%. Yeah, when I first got it started investing on my own, I got carried away with Apple stock, and I had a portfolio. My growth portfolio was over 50% Apple stock at one point, and so I had to dial it back and put in the work for some other. Putting a couple of quantum ETFs on this chart. So the WQTUM and QTUM. Okay, let's put this on year to date. Pretty similar performance. The QTUM is up about 47%, and WQTUM is up about 42%. Similar as far as expense ratio, also 0.45 and 0.4. QTUM does pay a dividend, but they're both very, well, let's see. QTUM has an inception date of 2018, while the other fund seems to be around the summer of 2025 or late 2025. But these are a couple of ways of getting exposure to quantum when it comes to your portfolio. But we're not going to be able to see too much history when it comes to this So I put it out to the year time frame, which I don't even think, let's see, was it around September? October of 2025, the Wisdom Tree Fund came out. So, but yeah, you have to take a look at those expenses and the performance and find the right fit for your portfolio. There are thousands of different funds out there, ETFs and mutual funds. So you can find something that gives exposure to what you want in your portfolio without having to have your money and say, oh, how much Procter and Gamble do I buy? How much Apple? How much ExxonMobil? Or, you know, when you start thinking about all the different companies out there, Costco, Walmart, the things that you potentially, the different areas that you potentially could want exposure to in your portfolio, it would be overwhelming. And so these funds are built to keep us on track, and so many of them have low expenses, so you're not going to have to worry about your money getting eaten away by all of these fees. Okay, over 1 year. Okay, all right, so congratulations, Nemo, on getting that gifted membership. Feel free to drop me any extra questions and be on the lookout if I do, or you can leave me on the members tab. You can leave me any questions or requests that you have, and I will try to prioritize that so you can see what being a channel member is all about. So guys, again, make sure to like, subscribe, hit the notification bell, make sure that you hype my videos. I think everyone that, you know, if you have that available to you, I think you get about 3 per week. So if I put out any content that you think is hype worthy, make sure to. I do not have my own Discord. I am a crowned trader in Keenan Grace's Discord, so I have a channel there, but I don't have my own Discord. So, and being a part of Keenan's Discord will give you access to him as well as several other crown traders, and they'll have you covered as far as long-term investing, options trading, just everything, crypto, all the different things. So all right, so like, subscribe, comments, hype, check out my referral links, consider becoming a channel member, use my referral link for the MooMoo Investing app, and all ways that you can support the channel. But thank you guys for tuning in. I'm thinking about changing my live schedule. The 3:00 p.m. Sunday Eastern Standard Time will remain, but there may be recurring Wednesday and Saturday added into the mix. So be on the lookout for that, and I hope that those are good time frames that many of you will also enjoy tuning in for. And I will see you guys next week. Thanks again for tuning in. Again, shout out to the J. Jordan for tuning in and gifting that membership.
And to investments, she make a lot on YouTube. Lisa J Stocks, Lisa J Stocks, that's the channel. Hey, if you wanna make some money, visit Lisa J Stocks. Yeah, you will make a lot. If you wanna make some money, visit Lisa J Stocks. Okay.